G'day everyone, welcome back to Pete's Investing. Today is June 10, 2023. This is the Aussie US currency update. You can see here on the weekly, we just broken up into a neutral positioning with that big bullish candle this week. As well, actually we're in a neutral and we're also in a bullish movement on the daily. So carefully going long and looking at these in more detail. You can see there we were in a bearish momentum primarily, but now we've broken up with this bullish candle, and that's giving us this neutral signal. So both the CCI moving averages and the moving edges of the price chart are not aligned, and hence it's giving us a neutral position. So we're not considering the weekly at this point. The daily, however, has broken up into a bullish momentum because both the moving averages of the CCI and the price chart are aligned after the price bounced off this key support at 64.58, and it's now approaching this diagonal as we speak. So we may see further upside. So there's no line or there's no resistance forming at any stage yet. On the hourly, we did draw this divergence on the CCI before our previous video with this bullish divergence on the price chart. And we had drawn this Fibonacci retracement and a target area. Now you'll notice the CCI is continuing on a downside, and so is, I want to delete this channel, and so is, I'm going to delete this Fibonacci as well and extend that on the price chart. So you can see there's still a divergence in this longer period. I'll get rid of that target because that's no longer valid. So you wouldn't have entered there because it didn't fall below the channel. So it's still playing out, and the way you'd play that, as I said previously, you would draw a channel, assuming that the price started falling. From there, you would draw a channel among those highs, bring it down to the lowest candle in that divergence range. So when the price breaks below that channel, that's when you start looking at potential targets. And that's where we start. We draw in that recent low to that more recent high, that Fibonacci range, and you put in a target range in the closest. Now, if it depends where it breaks out. If it breaks out up here somewhere, you may want to put a target area at the 23% to the 38%. But if it falls down sharply in the next few hours, in this range here, it's already going to be in a 38% range. So then you may want to put set another target level between the 38% and the 50% level. So it depends where it breaks out. That's where you would put that target area. Also, if you are going to trade this more with a better probability of success, you want to make sure you trade in direction of the weekly and daily. Here we've got a bullish backtest and a bearish backtest. You can see here there was quite a big drawdown on your profitability had you traded in a bullish momentum during this downturn. The way to avoid that averaging down, we don't use stop losses. The way to avoid that is to go to the weekly. So looking back here, for example, during that decline back in, that was around April 22. So around April 22, you can see that decline there. There was only a few long trades there, actually primarily short trades. And April 22 back here, primarily short trades there. So you would have only traded the short period. You can see there were no averaging down on the short period. Hence you would have avoided long trades there. So only trade short in that area with the weekly and the daily aligning, as well as the hourly. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.